Demand for surfactants is soft. It seems set to continue that way into 2026. Most of that's coming from the consumer products markets. And when you consider that 3/4 of the surfactant market by tons is driven by some form of cleaning, including institutional and industrial cleaning, but that softness in the consumer market is a big deal. This seems to be affecting North America for sure, and Europe in a big way. There's even reports of chemical plants closing for good, permanent closures right across Europe. This is not a new trend, continuing into this year. Western Europe, even Eastern Europe, and certainly the UK. Palm kernel oil shortage, PKO shortage, due to a number of factors. Plateauing yields in Malaysia and Indonesia, the lack of reinvestment in new plantings of palm trees, the return of Ganoderma, a disease affecting palm trees, and then you've seen consistently over the years an actual shrinking in the palm kernel size being engineered into the oil palm in order to increase the yield of the main product, which is of course palm oil, not the lauric oils which the surfactant industry is interested in. And finally, of course, the seizures of palm plantation acreage in Indonesia in a very big way. We've reported on this in the past, which is affecting all the major palm plantation companies, as well as, of course, many smaller holders. All these factors conspiring to bring about a very real concern about the availability of palm kernel oil to feed all of the oleochemical alcohol capacity that's slated to come on stream in the next couple of years, something around 1.3 million tons, so a 30% increase of oleo alcohol capacity slated to come on stream, really will not be able to find the available PKO to feed those plants. Unless, of course, you're an integrated player, in which case you're probably in much better shape. A looming normal paraffin shortage. This one's interesting. Normal paraffins, of course, providing the alkyl chain in linear alkyl benzene, an extraordinarily important intermediate for the largest volume surfactant globally. That's, of course, LAS. And so with the startup of additional fully integrated capacity, particularly the Farabi 4 project in late 2025, that's about 120,000 tons of LAB. With the startup of these capacities, there is less normal paraffins on the merchant market. So again, if you're not an integrated player, you may find yourself unable to get normal paraffins at a reasonable price, and this is likely, I would say almost certain, to lead to a tightening of the LAB market and an increase in LAB prices in the coming couple of years. Investment in LAB plants, roughly speaking, the market, the demand for LAB is growing at 2.5%, let's say, percent per year, 2 to 3% per year. This really justifies a new LAB plant of around 120, 140,000 tons every couple of years. And investment in those plants is not insignificant. The Farabi 4 project was reported to be a $950 million investment. That's for a full integration, starting from kerosene and benzene all the way through to LAB, through the normal paraffins. That seems high, but I've heard other estimates in the $600 million range. So these are not insignificant. So again, if you're a non-integrated player or you're buying from non-integrated players of LAB, you should be concerned looking ahead through the next 2 to 3 years at least. Sustainability, yes, certainly, of course. I think a certain amount of preference falsification has fallen away in the last year or so, but it's still a priority for companies to the extent that customers are willing to pay for the options available. And so, for example, biomass balance has established itself, I think, fairly comprehensively now in the surfactant supply chain. Biomass balance, LAB, detergent alcohols, ethylene oxide, amines, etc., etc. So I think it's possible with a fair degree of convenience to put together a good portfolio of biomass balanced surfactants. The question is the premium worth it? Are your customers, your surfactant consumers, willing to pay for that such that a return on the investment on the bio-MB options is available? Honestly, I think the jury is still out on that. Let's see how things develop in the coming years, especially with some of those consumer headwinds that I mentioned right at the beginning of this video. Okay, so what does all this mean? I'm aware that the video so far has been a bit of a downer. I did see optimism among the smaller companies. I think part of that's, genetic. If you're a small, entrepreneurially owned, family-owned company, you have that optimistic mindset. At the same time, I think flexibility of the physical assets plays into that. So if you have more flexibility in your asset deployment, you've got the ability to spread your bets across a number of product sets and market sets a little more easily than the folks with the large, dedicated, high volume type assets. So I think having that diversified portfolio is going to stand you in good stead in your chemical business, as it probably will in the stock market. Not that I'm giving stock market or investment advice here, but diversification is very helpful in these types of situations. I do see bright spots outside of the consumer product cleaning market. Certainly agrochemicals have been very strong, reportedly for a number of players. I'm picking that up in a lot of places. So adjuvants and anything to do with the food supply chain. The other industrial markets like oil field and mining and paper and emulsion polymerization, paints and coatings, these all offer the ability for higher margins and a little bit more growth resilience than, again, in those commodity cleaning markets. So generally speaking, look, I know it's difficult as a chemical company to just say, okay, we're going to become flexible now when you've invested billions of dollars over decades into very much dedicated assets. But I think to the extent that it's possible, be very aware of where your capacity is, how much there is there, and in which direction the wind is blowing. My sense is, with no specific inside information here, I must stress that, but my sense is that there's going to be continuing consolidation in North America, in Europe, and by consolidation I include actual plant closures, as we're seeing in Europe, but additional also M&A that will enable companies to achieve additional scale, rationalize production assets where necessary, rationalize other types of assets where necessary. And finally, I would say, if you are outside of a vertically integrated structure, regarding in particular 2 points mentioned earlier on in the video for palm kernel oil and linear alkyl benzene, normal paraffins, etc., be very aware of your other strengths, right? Your other competitive strengths if you're not part of one of those vertically integrated supply chains. Or to the extent you can, develop partnerships such that you can achieve at least some of the benefits of vertical integration, because I think, we've seen the effects of that in the palm value chain for quite a while now. And with these additional pressures, I think that they're just really magnifying those effects. And we're also seeing it now in the LAB supply chain. And despite reports of the imminent death of LAB that I've been hearing for at least the past 30 years, LAB and LAS are about a quarter of the surfactant market in tons today, as they have been for many, many decades. So that's just something to be aware of. All right, I hope you found this interesting. I hope you haven't found it too negative, but these are the surfactant vibes I picked up at the ACI, which just finished on Friday, and they are very much surfactant-centric, so this is not meant to be an overall commentary on the state of the cleaning industry. But as we all know, surfactants are at the heart of cleaning, and other than water, the biggest ingredient in the cleaning product bottle is a surfactant or a bunch of surfactants. So thanks again, as always, for listening.